Hello, this is Steve Malone with ComStuffX. Hope you're doing well today and you get some good trades. In today's video, I want to briefly discuss one of those larger moving averages you should consider. It's a moving average that a lot of institutions and a lot of algorithms use to monitor the market. And simply put, the 200 moving average is often used as a barrier in the marketplace, whether you're using a simple moving average, which is the black line here. Now, a simple moving average gives equal weight to all price values. Now the blue line is the 200 exponential moving average, and the exponential gives more weight to more recent prices. And so you'll see a bit of difference between the black and the blue line, both being the 200 moving average, just factored a little bit differently. Now, one thing of note, when you're monitoring the 200 moving average, since it is a larger moving average, and the larger moving averages often dictate the direction of the overall market. So you might get some near-term up and down against the 200, and that is why the 200 is often monitored, because the 200 will act as a barrier. If price is trading above it, oftentimes the 200 will act as a floor, and the market will come down and bounce off of it. As you can see here, market came down and bounced off, came back down and bounced off of it. Other times, the 200 is treated as a resistance level, and when price trades below it, oftentimes price will move back, test it, and then bounce off of it again. So whether you're using 200 simple or 200 exponential, just be aware of how the market will trade off of that, and be aware of the overall direction of the 200, because generally speaking, that's the direction where the market is intended to go, unless there's some economic event that would turn the market opposite the direction of the 200 moving average. Now let me give you an example of what I'm talking about here from different time frames. Here we're on a 4-hour chart. If we made a move down to the 1-hour chart, we can see how the market played along the 200 here, bounced along. Then when it got above, it came back down, tested, and today we had a pretty strong move up and it came back down. Interestingly, if you move down to the 30-minute chart, you can see how the market, the direction of the market is, that it maintained the direction of the 200. And look at this, at the 15 chart, you can see how the market, when it came down, it was bouncing more or less off the 200s here in the 15-minute chart. You can see that even more evident when we take a look at the pound. Going over to the pound on the 4-hour chart, something I want to point out to you here is that notice the direction here that the 200s are going, whether it's the exponential or the simple, the direction is to the upside here. And notice here that price is moving up, but yet our Traders Dynamic Index with the lower highs are suggesting divergence, suggesting downward action. The downward action may not take place until the 200s level off and show sign of actual turn. We'll have to actually see some price moving back down towards the 200s, but not until the 200s level off and the price gets through the 200s will we actually see that actual turn in the marketplace. So keep an eye on that. Now if we go down to the 1 hour, what I want to point out to you about what took place today is notice how the market came, bounced, came back down, bounced, and look how the market's kind of resting at this 200 simple right there on the 1 hour chart. Dropping down to the 30-minute chart, you can see how the market just sat right on that 200 moving average. So if you're trying to figure out where the market could be moving back towards, check out the 200 moving average, whether you like the exponential or you prefer the simple. Now one thing I want you to note is you have to consider different time intervals. Take a look at the dollar CAD. This is the dollar CAD 4-hour chart. And notice how the market pushed below the 200 simple and the market's moved back and bouncing right below it. Again, this is a barrier. Can't seem to get above it. Now the interesting thing I found in trading monitoring the 200 moving average is oftentimes it can be different from one time frame to the next, and that will put us into a range bound market. Notice how the market is pretty flat right here. When we go down to the 1 hour chart, take a look at where the 200 simple moving average is. It's below price, and we can see here, let me minimize a little bit, we can see how price is just above and comes back and tests and can't seem to get below it. That's the same time frame as when we were up on the 4-hour chart back in this area. So this whole area here is really down by a 200 above it on a 4-hour chart, yet having a 200 below it on the 1-hour chart. So be aware of that as you trade, that when the market tightens down, you might have 200 barrier on one time frame and a 200 barrier another time frame. Well, hopefully some of this information will help you out, but my suggestion is this, is as you trade, be aware of where the 200 is at and how the market oftentimes will move related to where the 200 moving average is. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.